there, welcome back. Still tuned into All About Stocks. Jagannathan Thunugundala is still waiting by to answer a portfolio in the portfolio segment. Now, every week we pick one lucky viewer and go through his entire stock portfolio. This week we're looking at Yusuf's portfolio. Let's run you through his profile. He's a 24-year-old student and wants to know how long he should hold on to his stocks to get a 30 to 40% return on his investments. His first stock is SBI. He's got 15 shares at an average price of 1,945. Jagannathan, given that this stock hasn't done a whole lot in the last 3 months, appreciated only by just about 0.5%, he is sitting on a gain, so would you advise him to hold on?
He can stay invested. I think if he is having at least a medium to long term kind of outlook, he should stay invested. One is being the Nifty stock. If the Nifty has to bounce back from here, I think they will perform. And top of that, if there is interest rate cycle reversal, I think that should be benefiting SBI. Overall, I think he should stay invested.
Okay, so stay invested in an SBI. Reliance Industries 681. So fortunately for him, he's not been caught on the wrong foot with the monolith in the oil and gas space. Do you think he should hold on?
No, I think he should book his profit. I think he should look for a range trade in between 650 to 750 kind of thing. That means buy when the stock comes close to 650 and sell around 750. I don't think Reliance is going to outperform the market in the next 2 to 3 years.
Alright, so that's the advice coming in on Reliance Industries. 220 shares is what he's got of Suzlon. And it's not bad, Jagannathan, given that most people get off on the wrong foot with a Suzlon picking it up at levels of 45. Since he's got it at a level of 19, what's the word of advice?
Again, you should book profit and exit because this is one of those stocks which will never perform, and whenever the stock just a market performs, it will just take a technical bounce. I think many things are going wrong with the company. There are much better ways to play the Indian capital market. Suzlon is the way, not the way.
And what about a South Indian bank? It's a marginal gain that he is sitting on, and it's been in a very tight range.
Again, he should stay invested. As I said, the interest rate reversal should benefit in the banking stocks. I think he should stay invested.
Is that the same advice that you'd give for a BHEL given all of the uncertainties that we've been talking about in the capital goods sector?
Yeah, I mean, the stock is again comes back to 200 level, probably you can accumulate. Recently the numbers are decent. I think the stock would have got bottomed out around this level. I think 200 again, maybe he may think about averaging. Otherwise he can stay invested.
And DLF, Jagannathan, given the fact that there have been high interest costs which have dented the profitability, the margins also haven't been holding up too well. Is this a good stock to have in the real estate space?
Absolutely not, because the real estate, I don't think why anybody should enter at any level for this matter. I think the whole industry, no institutional investor scheme, no mutual fund investor scheme. Whenever the market takes the next dip down, I think the DLF will be around 140 levels.
Alright, so then Jagannathan, given that you have recommended an exit in a few stocks in his portfolio, what do you think Yusuf should look at buying into these levels that would really give him good returns on the overall portfolio?
As we discussed, maybe IDFC, Syndicate Bank, they should concentrate. I think in this kind of mood, mid-cap PSU banks may be a good, interesting bet. All in all, I think he should not get into this adventurous mode of let me buy Suzlon, let me buy Kingfisher. Always I say that when in a bear market, whenever the market bounces, you have every right to participate in the rally, but participate with good stocks so that whenever the reversals happen, you will not feel that much pain. If you get stuck with a bad stock like say Kingfisher, in the reversal it will be very painful. I think while enjoying the momentum, you should concentrate on the quality as well.
Alright, Yusuf, that's the advice that Jagannathan had on your entire portfolio. From the 6 stocks, he is advising you to hold on to 3. That's an SBI and South Indian Bank as well as BHEL. Let's move on then to Jagannathan's second stock pick for the week, and that's Syndicate Bank. Let's take a look.
Established in 1925, Syndicate Bank has a market capitalization of 5,470 crore rupees and has a network of over 2,000 branches. For the fourth quarter, the bank reported earnings that were dampened by a weak operating performance. Net interest income remained flat sequentially, while profits fell 8% from last quarter. This was largely due to a 51% jump in employee costs, which spiked operating expenses by 38%. Slippages for the quarter increased to 1,059 crore rupees, which prompted the bank to hike its provisioning cover to 80%. However, business fundamentals seem to be on track as advances and deposits showed a healthy growth for the quarter. Net interest margins also improved by 15 basis points to 3.6%.
Jagannatham, let's talk about Syndicate Bank in greater detail because there is one lingering concern that most of the analysts have that the asset quality has deteriorated sequentially with the slippages increasing to 1,059 crore rupees, and that's above the average quarterly run rate of 591 crore rupees for the past 4 quarters. Does that worry you whatsoever?
One thing is when you think about investing, you will always have one or other question mark. You will all have one or other hiccups. Only thing is how you will handle that hiccup and whether you are ready to take that risk or not. I think considering that the share is trading around 5 to 6 PE multiple and less than 1 price to book, I think all those problems are already being factored in. So and you need not worry because if you are thinking that let me find the best of the stocks, I don't think you will find even one in the market.
Okay, and then in light of the way the stock has been trading, it's been vacillating in a range of 84 to close to 100 over the past 1 month. Jagannatham, when can we see it cross 100 levels and stay above that with conviction?
I think this bounce, at least up to the RBI monetary policy anticipation, I think the stock should be crossing 100.
Speaking more about the RBI policy, Jagannatham, it seems to be factored in this time around that we will be getting a rate cut, although the CRR might not be tinkered with. The RBI governors have been giving conflicting signals, but what is your take?
While the market is focusing on RBI, I think the result that is going to come from Greece one day before, I think that will be the real game changer. I think RBI, I think 50 basis point market is expecting. Anything lower than that, I think there will be a huge sell-off.
So how do you believe the banking stocks are going to read into monetary changes that will come into the policy this time around?
One is let the RBI give whatever policy they want. That's irrespective. At least you can enjoy the rally and momentum after the build-up of the monetary policy, in the sense that next 1 full week you can enjoy the rally. Maybe you can book profit just before the monetary policy. Let the RBI take whatever decision they want to take.
Okay, we'll slip into a quick break. Remember, Jagannatham Thanaguntala has recommended IDFC for the long term as well as a Syndicate Bank for this week. Time for a quick break, but on the other side, we'll be answering all of the stock queries that you've sent in through the week.